So I hope you guys have like understood like what he was saying. And as we go into this session, you'll notice that basically like not all the concepts that Sprax has talked about are the same as the concepts that I'll talk about, but bottom line is supply and demand is supply and demand. So you'll have since you've taken notes of both you've taken notes about both strategies on how he does it and how I do it, you'll be able to see like which one is much better for you guys and which one is not. So I will go in right about now. Just send me just say yes if you're ready to go into the next session. Lovely. So
I'm back.
Okay. So as we start this we'll do a couple of drawings. And so I hope you guys, I'll be leaving like a drawing up for like 1 or 2 minutes, then I'll be rubbing it off once we start going through the main points. So this is the first page. You will see that we are learning the supply and demand strategy on the 5 and the 15 minute. So the way I trade supply and demand in this lower time frame is I have a couple of rules that I have set that guide me towards making entries and making exits. So that's basically my checklist to making the trade. So the first part of it, I'll talk about respecting zones. So that is selling supply and buying demand, basically. Then as I finish up, I'll talk about swap zones as well. Swap zones, because there's some times that you'll buy into a supply zone and you'll sell into a demand zone. So we'll talk about that as well. So that's the overview of like the new PDF that I have written. You guys will get it in your emails probably in the evening as the whole Zoom session is sent. And also how we'll send the Zoom sessions is we'll divide it into two. Like you see how Sprax is talked over in the first part. We'll divide it into his session and my session, and you'll get 2 videos. And then you'll also get the books, and that's how we're going to go. So these are the topics that I'm going to cover. Zones, what to look for when identifying and drawing zones, what to look for when anticipating for a valid setup, when to look for buys and when to look for sells, how to properly make entries, setting SL and TP, applying risk management. So I think I won't take much of your time, though I'll take most of the time to answer your questions. And pardon me if like I'll be taking questions after every subtopic, every topic, like what are zones. After I explain what zones are, I'll be able to like give you guys a moment to like confirm whether you guys know what I'm talking about, whether you have questions regarding supply and demand zones, and basically that's how we're going to go for the next topic. So going to the first topic, yeah, different supply and demand structures. So that's what we're going to cover first. So I'll be drawing just now. So given the following structures, you'll know that you obviously know that supply and demand zones are basically of 4 structures. There's the, let me type this. There's the rally. Sorry. There's the rally. Sorry. What the fuck? Rally base rally. So that's the first one. There's the rally base drop. Then, no, let me put it as continuation, yeah? Continuation patterns. And there are reversal patterns. So in continuation patterns, you'll know that we have the rally base rally, and the drop base drop. And for reversal patterns, you know that we have the drop base rally and the rally base drop. So that on a diagram, let me draw something for you guys here. So basically, when we talk about rally base drop, you'll see that rally base rally, that is basically this. Let me undo that real quick. That's basically what we're looking for. This zone is the base. This is the base. So this is rally, base, then rally. And the reason why, let me draw the drop base drop as well so that you guys can see what I mean by a continuation pattern. So this is the base. This is the drop. So what you see here is when we talk about a continuation, that's basically like you see in this one here, the price was in an uptrend. And as the price was in an uptrend, we consolidated and waited for, we waited to gather liquidity, and then we pushed up further. So that is the first zone that that there is. Then you see the same thing happens on the drop base drop. Dropped, formed a base where it was looking for liquidity, then it dropped further. Then we also have, let me wrap that real quick. Then now going into the next one is reversal pattern. So we have the drop, base, rally, and we have the rally, base, drop. So this is what we're looking for. And you'll see that in most of my IG, you'll see that okay, this is the drop, base, rally. This is the rally, base, rally, base, drop, right? So what you tend to see is that on my IG, mostly I talk about bases on reversal patterns, yeah? And these are the zones that you're going to focus on. Because on the 5 minute and on the 15 minute, we are looking for highest probability setups, you know? So if you're looking for the highest probability setups, you won't, and you're looking for a good risk to reward ratio, you'll have to look for zones that give you good risk and reward, yeah? Just a minute. So let me make a bit. So so coming back to this, you will see that we are focusing on the drop base rally and the rally base drop. So now let me wrap that, hoping that you guys have understood. Let me check whether you guys have any questions so far. That was you can actually drop a question if you guys have a question, but I don't know whether you guys have any questions. Let me check. If there are no questions, I'll go to the next slide. Seems like there are no questions, so I'll go to the next slide. So let me wrap this real quick. So now we've already now identified the zone. Now we've looked at different structures. So now we go into supply and demand zones now. So we have, so this is a tick. Now we go to supply zones, okay? So basically how we draw supply zones is we look for something like this. So there was an uptrend. Since remember that we're only dealing with reversal patterns here. So this is let's see. This is a rally base drop, right? And so when you're drawing a zone on the rally base drop, what you do is you use this high and the candle open to the swing high, okay? Swing high is basically the candle wick on the top. So that's how I draw my supply zone. All this is my zone. Okay? So you'll see that this supply zone, I'll explain it later when I'm talking about the highest probability supply zones. So since supply zone is out of the way, I'll also draw a demand zone. So I'll rub part of this. I'll rewrite it. So we come back here and we see that we have this price dropped. And now we form a zone here. A zone here. We form a zone here. And now in this zone, you'll see that we will use this as a zone. So we'll use this candle, the wick on the bottom side of the candle, and this candle open. So this will be our zone. Let me draw it in a different color so that you guys can be able to see the difference. Yo, what the hell? Just a minute. So let's say that's the zone. So this is a demand zone. This is a supply zone. Okay. So you'll see that here we used on the demand, we used the last bearish candle before the reversal, and on the supply we used the last bullish candle before the reversal, right? So let us sink in for a moment, since we've now dealt with supply zones and demand zones. And then now I'll hop into imbalances right now, just now. So hoping you guys have either taken a screenshot of this or you've drawn it just as I've drawn it. Now we'll go to the second part. So let me rub it real quick. Let me just clear everything. Okay, so hoping that you guys have been able to, so just a minute. So we've done that, we've done this, we've done this. Now we go to imbalances. So once now we've been able to identify zones, we've already been able to see what zone, how to draw the zones. Now we'll start looking for imbalances. Imbalances is basically like when there's a high influx of buyers or sellers in an area, and so that zone is considered as an imbalance, such that when the price gets back to that zone, the price will either rally past, or if the orders are being taken at that zone. So if the orders were already filled, the orders will no longer be taken, and the zone will be broken, or the inverse will happen, where the zone will be respected, right? I don't know. Let me see if there are any questions. I can see there are any questions. Are you going to show us examples on charts? Of course I will. Of course I will show you guys. I'll show you guys the examples on charts. Just let me first finish the presentation. So now we go to imbalances. I had explained. So now I'll draw for you guys an example of like an imbalance of a supply zone. Okay, so this is the supply zone. Sorry. Come to draw. Okay, so this is a supply zone, right? So in order for you guys to know like how an imbalance works, I usually basically say, when the zone was formed, how far did the next candle move away from the zone? So the candle closed here. So this will show significant imbalance, such a zone. You see, like the price got to that place, and the reversal at that point was so much that it caused an engulfing candle, and the price continued to drop, right? So I would consider this as a valid zone. You see, so this will be my zone, because you can see that the amount of imbalance that is in this zone is so much that it caused the price to reverse so much, and it in turn formed a really nice zone over there. And the inverse is true for the demand zone. Let me just sketch it real quick. You guys can also sketch it on your notebooks, and you can be able to see whether I'll have drawn, whether you'll have drawn the same thing as I've drawn. So I'll give you a second to draw an imbalance on an imbalance at a demand zone, and then I can continue from there. You can show me in the comment section. You can just tell me in the comment section whether you've been able to draw. Okay, so what about if it's just one candle and no continuation? Is that still an imbalance or a continuation needed? So let me try and this. What about if just one candle and no continuation? Is that still an imbalance, or is it a continuation trend? So you see that I've talked about continuation. I've talked about continuation. We won't use the continuation. Continuation imbalances on continuation are basically like this. You see, price probably came here, right? Then this is a demand zone that is forming. This is a demand zone that is forming here, right? This is a demand zone that is forming here. Therefore, the candle, if it'll be a bearish candle over here, something like that. And if it's a continuation of an imbalance, this price will shoot up like that. Okay, so this is of course this is an imbalance here. Let me draw. This is an imbalance in itself. This right here. But now we are on the 5 minute. So even if there is such an imbalance on the 5 minute like this, my strategy tells my rules tell me not to take the trade. Okay, because my strategy is basically trading the reversal zones. So of course this is an imbalance, but I won't take the trade. I don't know whether that makes sense for you, Sakib. You just tell me that. Only the reversals. I'll talk about the reversals first, because that's majorly what my strategy talks about, and then from there I can, once we're going through the chart, we can be able to look through certain zones like that. And I can also see, so Gaz is asking, so will you enter after the engulfing candle? Okay, we are not yet into entries, bro, so just give me a minute. So okay, you've been able to but okay, one more question. But that imbalance can also be called a base, right? It's actually a base. You remember when we were talking about rally base, drop base, rally? Yes. So can you re-explain? Okay. Let me sketch it real quick. This is for you, Crosby. Yeah. This is for you. Let me re-explain this. So what we've said is, if you remember what I've just mentioned at the start, I said there's a rally, base, drop. We are considering reversal trends here, okay? Reversal setups only. So a reversal setup is basically, you see something like this. This is a reversal because price was in bullish momentum and then it reversed and switched into bearish. And then we also come to the drop, the rally. Sorry, let me undo that. We come to the drop, base, rally. This is a base, right? So now what I'm expounding on in about the imbalances now is what proves to me that this zone had imbalance, you know? So what actually proves to me that there was imbalance here? So like now, let's say, let me talk about this supply zone, okay? So price basically came up. I hope you guys can understand till there. Then after it came up, just a minute. And after it came up, it formed a zone, this zone here. And that's the zone that I want to draw right now. So we've said it uses the last bullish candle from the open to the wick. And for this to show me that this is an imbalance, there has to be an engulfing, okay? So the engulfing will form something like this. This, to me, shows that there is a lot of imbalance in this area. That means that when price comes back to this zone, there's going to be either a strong rejection once more, since the orders that were in this area weren't all filled. You know, like if price gets to this zone and rejects it, that means that it rejects it with such momentum. It shows that there was really, really strong rejection at that area, and that means orders. There were a lot of orders here, and that means when most of the orders were taken, the institution wasn't able to place all the sell orders. So that means when the price comes back here to this zone, the remaining orders that were here are going to get filled, and the price is going to drop again. I don't know whether that makes sense. You can tell me. You can just put it in the chat right now whether that makes sense. Yes, good. So I'm glad you got it now. But I'll continue with explaining this. So now, with that in mind, look at this now. And I want you guys to answer this question in the comments just now. So we've said that this is the zone. We've said that this is a zone, right? So if this is a zone, what if price left the zone like this? Yo, bro, who's sketching, bro? Stop it, man. So what if the price came and did this? Will I consider this as an imbalance? Just tell me, answer the question in the comments. Yes, we wouldn't consider it as a zone. Yeah, we wouldn't consider it as a zone. So I'm glad no one has said yes. So that means that everyone is actually understanding what I'm saying. So since that is not a zone, and I'll show it to you guys on a chart. So that means this zone will be drawn like this. This is a valid setup. That to me is a valid setup, right? So now with that in the way, I hope everyone has understood. That means you can actually still drop a question. So now we are going to fresh zones now. Let me see if there are any questions. I can see the questions here. Only if it closes below the zone. Just a minute. I think I'll answer you guys these questions when I show you on a chart. So please hold on to those questions. Okay, yeah, hold on to those questions. Once I go to a chart, you guys will be able to understand what I'm talking about. Then now I'll explain all that. I'll explain all of that with fresh zones. So let me just real quick, let me open a chart. Then you guys can be able to tell me, sorry. You guys can be able to tell me whether you've been able to understand. So. What the fuck is this? So I've got one really nice screenshot over here that will actually shed light on everything. So let me drop this real quick. Clear all drawings. So okay, don't actually look at all these writings that I've done here. Don't look at all of them. So what I was basically talking about when I was saying imbalances, because I just want to use this as an illustration to explain what imbalances is. You see a zone like this, this zone here. You see this? Price got here and rejected it to this strong wick. And what do you see when price comes back to that zone again? The orders that were placed here and weren't all filled came back here and filled all those again. Okay, they filled all of those again, and you can see that the target was hit because I aimed at this, filling this until this zone. Okay, so that's basically what I'm talking about with imbalances. Same case with this demand zone here. You see, price engulfed it, and you can see the move. The move away was all green. That means that the imbalance that was at this point caused, okay, the zone over here caused a lot of imbalances, meaning that a lot of trades were, a lot of pendings were by the institutions were taken here. And so price, the probability of price coming back to this zone and bouncing off are high. I don't know whether that makes sense. You can respond in the, so let me see the questions. When are you getting that Audi, bro? Okay, never thought about imbalances in that way. That makes a lot of sense. Yeah, thank you, bro. Do you only target a certain amount of pips, or is your strategy zone to zone? I'll get to that, bro. I have it in the presentation. So since I wanted to just explain the imbalances at first, so let me go back to the presentation and let me go back to the presentation. Yeah, so why the fuck does it keep doing that? So fresh zones. I want you guys to think of fresh zones this way. So what I'll do is after I'm done with this zone, this whole topic will drop down to like we'll drop to like the charts, and then we scroll through like about 3 to 5 examples of supply zones, demand zones, and imbalances, and then fresh zone. So when I'm talking about fresh zones, I want you guys to think of it this way. Price, let's say price was in a downtrend, okay? So we are looking for, okay, let's say we're looking for fresh supply zones, right? So what the fuck? Fresh supply zones. Fresh supply zones means that you take this drop as a wall, okay? Like, let's say there is a wall here. By wall being here, that means that anything before this wall doesn't really count. All that counts is what is after this wall. Okay, so with that in mind, if I'm to look for fresh zones, I'd keep this wall in mind, and then I'd draw. If I was to look for fresh zone, let's say price came, dropped in here, then with a really big, like, okay, like continuous candlesticks that are red, and then it starts coming back up, my supply zones that will be fresh will be zones that are like, let's say there's a zone here. This is considered as a fresh zone, okay? But I wouldn't term this as a fresh zone. Let me just draw it real quick. I wouldn't term this as a fresh zone. Let's say price was dropping. No, you don't drop in green. Price was dropping, caused a base, then continue dropping. Then price starts coming back up. And then it forms some sort of zone here. Can somebody tell me why this zone isn't fresh? There is a base here. There's a base, probably like a candle here. It looks something like that. So someone tell me why this zone here isn't fresh. Let me check through the comments. Okay, seems like no one understood. So let me drop down to a chart. Exactly, Slim Boy said because it was a continuation pattern. Okay, yeah. Let me show you guys on a chart so that you can understand. So So just give me a minute. I open my trading view. Okay, so this is a trade I took yesterday. Sorry. So actually, I've opened the chart, and this is the first thing I see. So this is lovely. Take a look at this. Take a look at this here. You see this zone here? No, green isn't visible right now. You see this zone here? When we are talking about a wall, this is the wall I'm talking about. For example, red candles all through, red candles all, apart from this, of course. So you see all these red candles. Yo, that thing looks fucked up. Sorry. So there's a reason why I wouldn't consider this area as a fresh zone. If it, like, for example, I wouldn't consider this as a zone, but I'd consider a zone around here as a zone. And this is because, like, this price here, there was a previous zone. Even though we're not using the the drop base drop and the rally base rally, still remember this as zones. Okay, so this zone, that means when price comes back and forms another zone that you can see over here. When price comes, since this was a drop, drop base drop, that means this is a zone already. And so if the price comes and forms a zone over here, I wouldn't consider this zone as a fresh zone, because there is already a base over here, and this is a zone in itself. And so this and this automatically tells me that this is not a fresh zone. But if you look at something like, let me rub it all. So I want you guys to, like, look at a zone like this, already that I have drawn over here. So there's nothing here. There's nothing here. You can see all this is space. So over the past, I'll give you the number of bars that I use on 5 minute. On 5 minute, I use roughly 100 to 200. These are the bars I look for before drawing a zone. Like, let's say when I was drawing this zone, I looked back for a couple of, let's say I looked back 200 bars, right? 200. Now let me just say 100. Let's say I came here, then I placed my cursor here, and then I looked back 100 bars, and I don't see any other zone around here. This to me is a fresh zone, okay? This right here is a fresh zone. And so, like, now you see when I came here, I can't draw this zone, because if I look back 100 to 200 bars, there is a base here, and therefore this is not a fresh zone. So with that out of the way now, I'll go back. Are there any questions? If there are no questions, then I'll go straight to back to the. Do you use imbalances zones only? Yes, I use imbalances. Of course, sometimes I'll take trades off. Okay, for me, I draw zones that are engulfing, and engulfing is basically a lot of imbalance. Like, let's say, look at this trade here. This is a lovely example of an imbalance. Look at this here. Look at this push away from this zone. Price came and formed this zone and pushed out, okay? Price pushed out strongly and then came back. Then when it came back, it pushed out again. And so you can see my entry was here. And my entry was here. Of course, I just, like, know that if price pushes out of the zone again, that means the orders that were here, the orders that were taken the first time, they ended. And then the remaining orders that were here, caused price to push out again. Yeah, so that's basically it. Just confirm with me that you've understood what I've talked about. Let me check your charts right now. Can we say the zone, the fresh zone might have been affected somewhere on the higher time frame? Okay. I'll get to looking at the higher time frame on the last slide. I wasn't putting the number of bars when trading. Dang, bro, I just learned something. Yeah, of course, yeah. Was there a down on a zone way back? Maybe on the 1 hour, 4 hour. I'll talk about the 1 hour and 4 hour in the future later in the video. Why don't you draw the zones to the future? What do you mean to the future? I only look at one touch to a zone. What are your confirms to enter a zone drawn in the 5 minutes? I'm actually getting to that right now. So let me get, that's actually, I think that's the next thing that I'm going through. So, yo, bro, I don't know why I haven't muted you, bro. Just mute yourself. Let me finish. Don't do that shit. Yeah, don't do that shit. Okay. So what to look for when drawing zones? I think we'll cover this just right now. It's basically like a continuation of what I had talked about. So let me just sketch it. Oh, what the fuck? Why does it keep doing that? What to look for when drawing zones? Okay. So I'll basically just run through this really quick. So the zone rules. When drawing the zone, these are the rules that I look for. Okay. We've already talked about look back candles. We've talked about engulfing, but I'll still talk about it again. Size of the zone. Okay, and this. Okay, so let's still consider supply zone. Okay, prices rallied, caused a base, then it dropped. Hopefully we're together till now. So on this zone here, bro, you see that? That's going to be my supply. The last bullish candle before the reversal. So when I talk about swing low or swing high, swing high. So this I'll write an SW. So like this. Sorry, let me undo that real quick. So if I'm to consider zone, okay, if I'm to consider a higher probability zone, then I'd look for a swing high. This candle that I've used, this should be the highest point. Okay, this what I'm drawing over here, this should be the highest point from the previous candles and the candles after forming after the zone. What I mean by that is when I draw this zone like this, when I draw this zone like this, okay, these candles that were formed before, let me draw this for you. Now let's say there was a candle, this previous candles before. What I mean by swing high is this new week over here shouldn't go higher than this zone here. So this to me, if I see something like this, that's a low probability trade. Okay, let me first of all talk. Don't draw the zone if this happens. If this swing high is broken by this, and same thing with regards to the candle as it pushes away. Okay, if this candle breaks this high formed over here, as it pushes away, this to me is not a valid zone, because what we're looking for are swing highs and swing lows, swing highs, swing lows. So if this candle that you're using to draw the zone doesn't form the highest point on a supply zone, or doesn't form the lowest point on a demand zone, then that zone to me is dead. Even if it had like a lot of imbalance in that area, I won't consider the trade because it's broken one of my rules. You see, this and this shouldn't go higher than this zone formed over here. So I don't know whether that makes sense. You can chat with me you can actually drop a comment on the chat to see whether you guys understand what I'm saying. Yes. Glad that it's making sense. So I'll give you a minute to visualize that. Can you draw it on the? Can you draw for me? Can you draw and cross check whether? Okay, draw a demand zone and ensure that this and draw that the swing high should actually be how the swing high should be and how it should not be. Let me just have a bite as you guys draw. So if you won't draw it, then you just leave it, yes. What if the second bearish candle stabs the zone? That's actually what I'm coming to next. So we talked about engulfing. We talked about swing high and swing low. Look back candles, we're just from talking about it. Now we'll drop to, sorry. We will drop to zone to move ratio, okay? So let me erase this real quick. Hope you guys drew the right. Who the fuck is drawing, man? Who the fuck is drawing? Just give me a minute. Just give me a minute. Okay, doesn't matter. Okay, so looking back, we've covered this. Swing low or swing high, engulfing, and look back candles. So now what we're going to talk about is size of the zone. So these two are like basically working hand in hand. So let me put that in something that you will understand. Still, we're talking about supply zone. Price comes, drops down. Okay. So there's a zone here, and we draw the zone with white. Okay, there we go. So let's take this. Let me use yellow. Yellow is bright. So we take this as the size of the zone, the way we were talking about it, as A. Okay, that's 9A. So the price comes, then drops down. Price drops down like that. Okay, so stocks. Could you stop that, bro? Stop that. Trying to have a class with these niggas. So what I look when I'm talking about the zone to move ratio. So the zone is A. Now we go to the move ratio. The move ratio is basically how far the price pushes away before reversing and coming back to the zone. Okay, so if I'm to look at the yellow zone, this to me, if the price reversed over here, this to me is the zone. So I'll take this as B, and that's the move ratio. Okay. So for me to look back at the zone and actually consider that it is valid, the ratio A, color is not visible. The ratio A is to B should be at least greater than 1:3. That means that this zone, let's say this zone is 1, okay? Let's say this zone is 1. The size of this zone is 1 pip. So I'll only consider this zone as a decent zone if this move away is 3 pips. I'll start drawing the zone. I'll start considering the zone if the price pushes away 3 times the way it's pushed out. So I don't know whether that makes sense. Let me check whether you can see this one question. Just yeah, thank you, Mario. It's not funny. So let me just check who is doing that. Let me just check. Just give me a minute. Okay, whoever is doing that, don't do that again. Don't do that again. So that's what I'm talking about when I say 1:3. The move away from the zone should be at least 3 times the size of the zone. Okay, so I don't see any more questions. So I think that has been understood really well. So I think now we've gone through like all the three. So we've talked about swing, size of the zone, engulfing, zone to move, and look back candles. So if there is no question, I'll go to the next slide. Yeah, there is no question. Okay. Let's move to the next slide. So now we are done. No, let me check. Let me check for a screenshot to see whether I think I had a couple of screenshots. So let me see which one it is. Let's say this. I'll go back to this setup. Yeah. So you can see that this. You can see yellow. You can see yellow. This zone, it's definitely, I think even visually you guys can see that this zone, let's say this is A, this being B, this size of the move, the size of the zone and the size of the move, you can see that they are it's more than three times, because if this is A, probably the next there's probably one there, probably another one. So that's more than three times the size of the zone, because this is a zone. And so this is more than 3 times. So when price comes back, this to me is a valid zone, because I already drew it because of that. So yes. Don't worry, we'll go through some chart time to see what I'm talking about. So back to the slide. Here we go. So now we go to the next. Anticipating. So this is basically like the same thing that I was talking about with the move away and the move back to the zone. So move away. Now we'll come into move into the zone. Now, before we get to move into the zone, let's talk about time of the move away. Okay. So we go back to drawing the zone. The zone. Let's say we are forming a supply zone. I love supply zones. So that to me is a supply zone, right? If that is a supply zone, that means when price is rejecting, we want to see how much time the price has taken to come back here. Sorry, excuse me. So basically, the faster the price comes back to the zone, that means I'll consider the zone. But now you see, if price leaves the zone, if price leaves the zone, if price leaves the zone, then takes forever. Okay, not forever really, but takes some time before coming back. That's when I won't really regard this as a nice zone, because that means that the order, the institutions had like taken a number of it's like their positions over here were really taken, and so they don't have need for that price level again, because all the orders that they had over there were filled. Don't know whether that makes sense. Let me check. Seeing some questions. So move away must be 3 times. So move away must be 3 times zone size. At least, not it must be 3 times, but it must be 3 times or more. I don't know whether that makes sense, Gaz. Yes, okay. Then that's good. So time of the move away. I think I had a screenshot. Let me see. Yeah, clear all those, clear drawings. And now I come back here and check. Of course, I took this one. Let me show you. You see, I used, okay, now going through, I can see some questions. It does make sense. How long is too long? That's what I want to talk about. That's what I want to talk about right now. So looking into this zone. So let's go through the rules that we've given. Undo that and use black. Okay, so 1. When we are going through the criteria, okay, you guys give me the criteria that we've just talked about when drawing a zone regarding like the candle, the move away, and all that stuff, so that we can checklist, we can checklist and see if this zone was actually proper. So yes, swing high. So yes, so let's look at the swing high. Check for swing high. Everyone is getting that one correct. That's lovely. So yes, that was the swing high. Swing high from the previous candles before the zone. So there was no candle that actually broke the swing high caused by the zone. So that is not lovely. What else? Imbalance, lovely. Yes, imbalance caused by this. Pushed away really nicely. Yes. So zone to move ratio, lovely, because you can see if we said the zone is A, that means the move away. This definitely looks more than 3. 1:3. So that is really nice. Then now, so far so good. Now, what you asked me how long is too long, right? Look back candles, lovely. Yes, look back candles. So now, how long is too long? Because you can see I took this trade here, right? So how long is too long? If I take a trade like if I draw a zone like this, then it takes, and you see this is the 5-minute, and it takes a whole half a day, more than 8 hours to get back to the zone. More than, as in, if it hasn't gotten back to the zone in that session, let's say I'm trading London, and at the start of London I drew the zone, and by the end of London the zone hasn't been touched on the 5-minute, I'll start disregarding the zone. I don't know whether that makes sense. Waiting for your responses. Anyone with a question as to what I've said? So what I've said, Mario, is you see this, you see we've checklisted and found that everything else is nice, right? So let's say you see this candle here. Let's say this is London open, right? London open. So if, as we continue with London open, and let's say London closed here, let's just, for an example, let's say London closed here, London closed, and the price hasn't come back to the zone yet. That means that if the price comes and touches that zone, I won't take a trade off that trade. I won't take a trade. So yeah, lovely, you've understood. So now we will continue with the. So now, since we are done with drawing, you're welcome, Mario. So now, since you're done with drawing the zones and looking at all the criteria when it comes to drawing zones, now I think the next slide is about. Buys or sells. Okay. Let me cover this buys and sells at the end. There's a reason why I want to cover it at the end. So entries. Now we're in entries, stop loss, and take profit talk. Okay. So entries. Let's start with entries. So when I talk about entries, okay, I think I see a question. Let me see. Sean, guys are trying to learn here, bro. So now let's start with entries. Candle in the zone and weak entries. So I think I have, let me just use an example of the charts that I had in the, so let's see. Let me just look for entries, something like this. Okay, I think this is good enough. So let me maximize that. I want you guys to do the same thing we did with the other chart. So going through the checklist, this was a swing. Sorry, let me change the color. This was a swing low here, swing low, right? These candles before almost broke the low, but it didn't break the low, and so the zone is valid, right? Right? Yeah, swing low, lovely, lovely. Thank you, brother. Imbalance, lovely imbalance here, right? Yes. Then, oh, I forgot to mention something. It's like I forgot is when, let me draw it real quick for an example of a demand zone. Like in this case, like you see, let me start with, you see, if price was doing this, that's what we're looking for in a zone, right? So now if these candles, as these candles were moving up, and then all of a sudden, like one bullish candle does this. Let me show you. Like there's a bullish candle here. Okay, of course there is a bullish candle here. There's a bullish candle, blah, blah, blah. If one of these candles does something like this and pierces through this zone as it's forming, I wouldn't consider this as a valid zone. And I don't know, I think there's someone who might have an explanation to that before I actually do my own explanation. Is there anyone who knows why I won't take this trade? Yes, it won't be fresh. So what, okay, if you guys obviously remember that we were talking about imbalances, right? And when we're talking about imbalances and how institutions take their trades is, if they were taking, no, let me use the example of this zone that has been drawn here. Price came and caused major imbalance here and pushed away, right? That means there were many orders that were being taken here. So what means is, if there was a candle that touches through this zone and rejects it, what does that mean? Basically, exactly, liquidity robbed. Thank you, Diera. Exactly. So all the orders that were here have already been filled by this candle. Don't know whether that makes sense. Yes, thank you, guys. Orders filled, yes. So I'm actually really glad that you guys are following up really well. Thank you, Slimboya. Makes sense, yes. So that's what I'm talking about. This touch, as it's going away, if it does that, yes, so no need to come back there. Yeah. So if this candle, let me show you real quick. If this candle right here came and did something like this and touched this zone and got into the zone and then pushed away the way it was doing, and price comes back and gives me all the other confirms that I would want, I wouldn't take the trade because of that piercing. So when orders are filled, does a move continue or die? Just take it this way. There are buy orders here. Right? Plenty of buy orders. So when price comes here, when price comes here and takes part of the buys that were here and then pushes away, that means there were some orders left here, right? So that means all these buys are probably going to push the momentum up, right? So what you're waiting for is a fill of the remaining orders to push up further. Don't know whether that makes sense. So that means that when this candle comes back and touches this zone, it's taking back all the buy orders here and pushing back away. Yeah, so I'm glad that you've understood, bro. So with that, will you enter once a week retraces? For buys? No. In this strategy, you have to work towards waiting for the price to come back properly into your zone. Okay. Yes, thank you. How do you need to follow the rules? Yes, thank you. So now we'll go back to the presentation. Seems like everyone is understanding things so quick. There's another question. Thank you, brother. Thank you, brother. Best webinar I have been on in a long time. Yes. So I think we've finished with move away and time of the move away. Now we will go into move into the zone. So in move into the zone, that's where we were talking about entries. Yeah, sorry. So we were in entries. So with entries, I will go back to the chart, talk about entries. Now you see this. I don't know whether you guys see this. You see this. There are two types. There are two types of entries that you can anticipate. I'll draw a large zone here so that you guys can see what I mean. Okay, so in the first instance, there was let's say this is a demand zone, right? There was a candle close in, and then, so this is after the zone has been drawn over here. There's a zone here. So now this, after it goes, it comes back. Okay, so now when it comes here, now we're looking for confirms to enter the trade. So this, you see, either that, or you'll see either that or this. Let me draw. Sorry. Then we have green candle. No, sorry. So now what I mean when I'm talking about this is when I see something like there are two entries. So this is entry 1, setup 1 and setup 2. Okay? So in setup 1, this is the best kind of setup that you can anticipate, the setup 1. That's because the price came into the zone, closed inside the zone, and then the next candle closed outside the zone. Okay? So to me, if I was to take a trade, and I saw such a setup, I will definitely take a buy. Okay? But then for this also shows a rejection of the zone. Okay? And it also shows that there was a lot of orders here. And so this, if I was to take a trade, I would wait. If this rejects it like this, I would wait for a bullish candle to form outside the zone. Okay, and like engulf. You notice that all these zones, when I'm waiting for confirmation, the best confirmation will be an engulfing zone, or rather, you can just wait for a bullish candle close outside the zone. So both these zones would, but I would take one tick out of this. So this will take this first one will take definite points for buys, and my buy will be there. Let me show you. My buy will be here. Okay, that will be my entry, and for here this will be my entry. I don't know whether that makes sense. You can share that in the comments, in the chat. Whoa. Just a minute. Let me check through the charts. Yes. Ask. What's your question, John? Okay. So sorry. Let me check through a couple of people have actually. So Sizwe Zwane, I'm sitting here like OMG. Is that a good thing or a bad thing? Luckily, we can see the webinar again for better understanding. What didn't you understand, bro? Mario, what didn't you understand? Fahim, just joined the webinar 5 minutes and you've already dropped a bomb. Glad I'm picking things up. I'm also glad, bro. So what's your question, Sean? But either way, you wait for candle close outside the zone. Yes. So what I'd suggest for you guys is sit on your hands. If you guys have quick hands where you don't wait for the candle close, sit on your hands. Okay. Sit on your hands and don't take a trade if you see that. Don't take a trade if you can't wait for the candle close, because you'll just waste yourself. Sit on your hands and wait for the setup to come. Okay, so I don't know how to ask it on a text. Okay, 100 charts. Yes, 100 charts. On the chart setup 2, we will enter on 3. Is 3. Okay, now I'll talk about that just now. Just now. I missed the bit about look back candles. I'll go through it once more when I'm doing a review of like all that we've talked about. Do you wait for a retest before you enter? Okay, that's a good question, and I would actually advise you guys to, when you look at a setup, always, I've noticed it depends on the pair, because pairs like UJ, once they reject off a zone, they go. You see, they okay. Of course, they move a little bit to gather liquidity, but they don't actually retest all the time. But pairs like GJ, because of the way they can put you into massive drawdown, wait for the retest, because retests happen a number of times. So like here, you will wait. Now you see, you'll enter here. Okay, the first you will have entered here, you know, and your target would have been around this area up here. But if you waited for the retest here, doesn't have to come back to the zone, but if you waited for the retest here, you would have had a larger risk to reward. Yes, where did you place the TP? I'm getting to TPs. This I didn't take this trade, but I'll explain to you guys. So now that we've done the entries, and I'm glad that you guys understand what the entries are, now we've covered entries. Now we go into stop loss and take profit, okay? Stop loss and take profit. Let me look for another. Let me go back to this. Yeah. So when talking about stop loss and take profit, if you want a good setup, anticipate to put stop loss here, just below the zone here. And take profit is usually you can have numerous take profit levels. Like for example, you just draw your zones. Like now you see, if you're in a demand zone, your exit will be at the next supply zone. Make sense? Yes. So if this in itself is a zone here, so my first take profit will be would be this area. Then the next profit will be like probably the next area, something like this. But now what I was talking to you guys about is, don't always anticipate, and that's the next point that I'm talking about. Don't always anticipate the whole move, okay? Especially on pairs like GJ, don't always expect the whole move, because you can anticipate the whole move. So you can anticipate the whole move and end up losing the whole move, getting back into drawdown or losing the trade. So what I'd suggest is, if you're getting into the market and looking for 10 pips, make that 10 pips and leave. So place your TP at 10 pips. If the TP hits, good for you. If the SL is hit, well, you've learned. But the thing is, have a pip goal that you're looking for when you get into the market. Is it 5 pips? Is it 10 pips? Is it 15? Is it 5? Is it 50? Is it 100? So go into the market knowing how many pips you're looking for. And when you go with such a mentality into the market, you'll be able to tackle the markets better. Yes. So that's something else I was to talk about. I don't see any questions in the comments. So Let me just bite something, then we'll continue. So you can sketch a few things on your end. And I'm coming to the end of the presentation. So entries, stop loss, take profit, already covered. And don't anticipate the whole move. So Slim Boy, I use the 5 minutes and 15 minutes. I won't lie to you, I use the 5 minutes and the 15 minutes. There's something small I want to talk about market structure when observing the market. You can go through my IG and you'll see, I think, 3 posts or so about market structure and seeing when price is stalling at an area or trying to break and it's not breaking in a zone. So you exit the trade early just before the trade can reverse on you. So like, let's say, I hope you guys understand what rejection weeks are. So now let's say we are on buys, right? So saying there is a level here, right? Price comes and touches it, and your TP is probably around here somewhere. So price comes with the first candle, does that. Price comes with the second candle and does that again. Price comes back with a third candle and closes with a wick like that. What does that mean? Someone in the chat? Exactly. Rejection and reversal, exhaustion, all those exactly. So when you observe something like that, it's best for you to close the trade over here. Or if you aren't so sure about whether it's going to break, just place your stop loss around here. Just place your stop loss around here, such that if it breaks, good for you, it'll head to the TP. But if it reverses on you, you'll have secured the bag over here. And that means even if the trade is to reject and now come down, it won't hit your SL. I'm glad that all you guys actually saw that. I'm glad that you guys actually saw that. There's one question. Do you use your strategy on all pairs, or do you have your favorites? I'll basically use it on any pair, even USDZR. Because the thing is, the strategy is the same, and and the market moves by supply and demand. It doesn't move by support and resistance. The market moves by supply and demand. Yeah, so I'll use it. I use it on any pair, but my best pairs are AUD USD, Euro USD, and USD JPY, and a few others. Euro pairs and Audi pairs respect it really well. Yes, so I think I saw another question. Let me just check real quick. Do you ever look at higher time frame for direction? This is you, Romeo. Basically, when I have my pip goal, let's say I'm aiming for 10 pips. I usually aim for 7 to 10 pips normally when if I'm to trade with according to my trading plan. And so if I'm to do that, then I won't really look at the higher time frame as much. I'll just get into the market and take my 7 pips. But it's best advised to look for the overall direction of the trend so that you know if you will aim for the whole move or you won't aim for the whole move. Because if the trend is bearish, let's say the trend is bearish, right? Then price pulls back and forms a supply zone here, right? So you know when price comes back to this supply zone and the trend is bearish, you can easily aim for the whole move and get more than the whole move. Price will probably just break structure and continue going down. But now you see if price was in a, let me show you real quick. If price was in a bearish and then price comes back and then you use this zone and then this zone forms, right? And price comes back to the zone and then gives you an open. The possibility of the price coming back and reversing and going against the higher time frame trend, you probably won't get this whole move. You'll probably get the move until like halfway as a liquidity push. So that's why I'm saying, look at the zone. Will it can it comfortably give you 5, 7, 10 pips? If it can, good for you. You can counter trend. If it gives you all your confirms. If it doesn't, don't take the trade. Hope I've answered you, Romeo. Do you use SNR with SND? No, I don't use SN support and resistance. I don't like, it's sort of like messy. So I noticed that drawing on uptrends, when it makes 3 consecutives like that, it's going up, down. Yes. So let's finish up now. So you guys can check examples on my Instagram. That's a bonus for you guys. Then this is what I was talking about. You guys have already answered it. It was actually easier to explain than I thought. So exits when observing market structure, stalling price. So we've covered that. Then take profits, stop loss, entries. Don't always anticipate the whole move, especially when counter trending. So that's explained. Let me see. I can see one question. Now I understand your IG posts better now. Yeah, I'm glad, brother. So with that in mind, before we go through probably 5 examples on the chart, I'll come and talk about risk management, okay? That's the last slide. Oops. So what setups do you aim for? This is just like an overview of I know many people don't understand what risk management is, and Forex 6 God is actually going to cover that. He's going to be up in he's going to be giving his presentation in 10 minutes. And so 10, 15 minutes. So what setups to aim for? Pip goal versus whole move trading. We've already talked about that. And if you got any questions, you can ask me. What percentage to risk per trade? This is simple. This is simple. And then I'll go through the power of compounding. So in the power of compounding, let me be opening a document. Real quick, so that you guys can understand what the power of compounding means. No, where is it? Desktop. Trading, supply and demand mentorship. What the fuck is it? I think it's here. Sorry guys, I hadn't opened it, so here it is. So as that opens, we will go through something small here. I'll explain to you what. Okay, here it is. Even. So this is what we're going to use to explain what compounding is. We're going to explain what compounding is with this. So going back to the presentation, what percentage to risk per trade? You can't, okay, I won't say dumb, because I've also done it previously in the past, but when you look at the banks give you 1% to 5%. Okay, they'll give you I don't know how much your banks give you as interest per year, but right here I think it's you can't get anything more than 10%, 15%, right? You guys can tell me what percent. Yeah, you see 0.5. You guys can tell me the percentages that your banks give you as interest. Then we continue from there. About 1%. That's per month, right? That's per month. Yes. So going back here, if you want to be profitable, you've got to trade like the bank. Not in reference to supply and demand now. Now I'm talking about trading like the banks in terms of risking and reward. What I'd suggest is aim for 5% per day, right? 5% daily goal. A bank will give you 5% in like half a year. So if you're getting 5% per day, you've got to be like really happy for getting 5%. And so in this 5%, that means you're risking. If you look for a setup that gives you 2:1, I mean 1:2, 1:2 of a ratio. That means if you risk 1, you get 2, So if you get such a setup, if you look for setups that give you 1:2, then it will be for you to get 5%. That means you'll be risking 2.5% if you're looking for 5%. And if you divide this 5% into 2 trades, taking 2 trades a day. So if it's 2 trades a day and you're risking 2.5, that means each trade you'll be looking to risk 1.25%. And for this 1.25%, if you risk 1.25%, that means that it'll take you probably like 90 to 100 trades for you to blow your account. Make sense? Does it make sense? Yes, thank you. Yes. So what I'd suggest, because many people will lose one trade and then revenge trade and end up losing your account. To counter that, if you really want to revenge trade, just risk 1%. 1% to if you're to risk the maximum, risk 5% per trade. That will still take you 20 trades for you to blow your account. But don't risk 1% on one trade. Then the next trade you're risking 5%. The next trade you're risking 50%. The next trade you're going full margin. You see, things don't work like that. That's why you'll see that since I have a full margin, I'll have a full margin account separately, because I know that I can't full margin on my main account, since I've got to stay disciplined. I personally risk 2%. That's nice. That's really impressive, Slim Boy. You won't blow your account anytime soon. What's your win rate? I think I've lost three or four trades in like the last 30 something trades. I don't remember, 30 something trades. So you can calculate that. Win rate. And the ones that I lost was because I was getting greedy. And so when you get greedy and go against your plan, the market will discipline you, bro. Yeah. So power of compounding. Let me finish up with the power of compounding, then we finish the presentation. Sprax, could you like tell Six God to get ready? Thanks.
Okay, let me holler at him.
Okay, holler at him. Yeah, holler at him real quick. So now, power of compounding. Here we go. So let's say you are working on okay. Most of the guys will start with a $100 account, right? Now let's say you aim for 5% a trade, right? 5% per day. And a year will give you, a year has how many trading days? If we have 52 weeks, we probably have 5 trading days. So that's probably like 260 days are trading days. And so let's just say 200, right? Let's say 200, right? Yes. 180 real days, trading days. Let's say 200, right? Yes, this recording will be sent to your email, bro. The numbers can vary from like 250 to 300 to whatever. Of course, you're not trading on Sundays and Saturdays. You're not trading on weekends. So now let's say you're looking to get a return of 5% per day. That's what I have here. Okay. Let's see how long it'll take you, how much this 5% will take your $100 account in 200 days. Because in 200 days, we're being realistic here. You'll see that we started on the 5th. You guys can note 5. So we'll be looking at 5, the interval of 5. So the first 10 days, you'll get to 162%. Consistency. Just aim for 5%. The next 10 days, you'll be at 200. The next 10 days, you'll be at 400. The next 10 days, you'll be at $700, right? You're still progressing. At the mark of 100 days, you'll see that you'll have turned that $100 to 10K. In no bank will you put $100 and you get 10K at the end of 100 days, let alone 1 year, right? I don't even think there's a number of years that you can put all of that. Yes, we started at the 5th. Yes. So now we progress. We're still progressing, by the way. We're still progressing and seeing where we'll get to at 200 days. So we're still progressing with the account. And you can see at 120 days, I think that's where everything stopped. But I think, I don't know why this one has this problem. But anyway, you guys will see that at the projection of 200 days, you'll probably be at 1 million USD. Okay. Doing 5% per day on $100 account. That means risking 1% to 2%, and that means you calculate your risk accordingly. The various sites where you can calculate your risk, you can calculate your lot size. I have seen a question about lot size there, so you can be able to check through various sites to download the lot size, to know what lot size you use. Yeah, even 30 years old you that. Yeah, what's good? Is he
He's
ready?
saying he'll be up in like 5 minutes. He'll be here.
Okay. So there's Peep Equalizers has just posted a position size calculator. That's actually really helpful. Thank you. So you'll see that you return, if you stay disciplined to work for 5% per day, over 200 days, you'll have 1 million. I don't know who will give you 1 million USD off for $100. But now this means that you'll have to sit down and not take, and tell yourself that you won't take setups that don't make sense, and have a checklist that you tick like, does it give me an engulfing? Does the zone have an engulfing? Tick. Does the move away, is it more than 1:3? Tick. You do the same thing for all the thing, like all the setups, all the things that I've told you guys about the zones, have them as a list so that before any trade you tick. If it gives you at least 80%, like almost all of them are actually giving you ticks, then, and it gives you a confirmation, take the trade. If it doesn't go well for you, no worries. You've only risked 1%. You can make the rest on the next trade. But always learn from all your trades. And if you have the checklist, that means that if you lose the trade, you'll know what exactly went wrong. And I don't know whether that makes sense. As I finish up now, why am I yelling? Am I loud? Am I loud? Or is, oh, it's Sean. Okay, so now let's go through charts. Just as we wait for 6God to actually come. That marks the end of my presentation, by the way. Good luck. Let's look for an example of a chart. I had a few examples here. Just let me close this one's real quick. So I'm not so sure where I had them. Let me see. Screenshots, yeah. So we'll just go through like all these pictures. I took them specifically for you guys. So we'll just go through all the setups on these trades, and if they went right or they went wrong and why. So this one you already talked about. Swing low, came back, tested the zone, and then rejected, waited for the retest, entered. Price will have taken a bit longer for you to hit TP, but anyway. Then now we go to the next one. Let's go to the next one. I can see some questions, so let me. Wonderful. Thank you guys. Thank you guys. Thank you guys. So there's this one. This is an example of, I remember you guys really understood when I talked about major imbalances. You can see this? That's a major imbalance there. Okay. Previous candles, swing, this was the swing. Swing low, of course, you can look, if you can ignore this one's over here. And that's why you can see if this was a swing low, but on the previous candles, this wasn't the swing low. And so when price came here, it rejected the zone. But anyway, if the price rejected, we'll still take a trade on the retest because that's a break in the swap zone. I remember Sprax talked about swap zones. Yes. So your entry you will wait for the price to exhaust and show you where it's going. Like, you know, when we're talking about breaking of a zone, if a zone is like this and price breaks, you'll wait for it to form the low, the new low over here. And once it retests and it shows you confirmation that it's going down again, this will be the target. Of course, you can let like one run with stop loss at break even, but in the event it breaks this structure and actually continues going down. But I know you guys understand what I'm talking about there. Yes. So you can see that price broke, retested, and came. So TP will be here. So the take profit will be here. And you can see letting one run, price broke the structure here and went down. Another example. Let's continue scrolling through the picks. So this one here is an example. And you can see I wrote price didn't close in the zone. That's what I was talking about when price just rejects the zone. You can see that this was a swing low, right? Of course, I didn't take this trade. No, I remember I took it, and this was one of the losses that I took. So look back, swing low. So that was a swing low, right? Imbalance, pushed up. So my target was actually this zone here. And you can see that's what I was looking for, a risk to reward of about 2.89, that's 3. But then you can see when price did this and then came back and closed in the zone, this will be, I will start questioning the trade, you know, because we said if price touches a zone, we'll wait for the next candle to close as an engulfing, right? Even though it doesn't close in the zone. And that's why I failed in this trade, because I didn't wait for the second rejection candle to close with an engulfing. And that's why this zone didn't hold. Yes, thank you, Karibu Alex. Yes, I mainly trade on 5 minutes and the 15. They work really well. So just a few more, then Alex will take the stage. So you can see this was my projection of this trade. This was my zone here, swing low, price came back, and now I was waiting for price to close inside the zone and reject it. This was my first target. So you can see my stop loss is just below this. If it broke this structure, I will wait for this zone to hold now. Yeah. And also let's go through the final ones. This, we've already gone through that. This is a good one. This is a good one also. You can see the prices are just holding on. So this didn't close. This is a swing. So this one didn't break this swing high. And so swing high, check, engulfing, check, move away more than 3 times, check, came back quick enough, check, closed in the zone, check, closed out of the zone, check, make your entry, put your stop loss there, and wait for it to get to the next zone. Easy as that. Easy as that. Easy as that. That's how I do my top-down analysis. I don't know. Do I have to? Do I go through it again for you guys? Are you guys okay? Are you guys okay? Yeah. Or do I do it again? Or is that yes for like doing it again? Can I do it again? Okay. So I looked at this zone, right? I hadn't drawn it at first, right? So when I looked at this zone, I looked at the imbalance. That was the first thing I checked for. An imbalance means an engulfing candle. So that's why I looked at that zone, right? Market pushed away. Lovely imbalance here. And the zone was an engulfing. So engulfing, so that's a check. 2, imbalance, check, right? Zone to move ratio is greater than 1:3. So that's a check, right? Then 4, the price came back to the zone fast, so that's a check. Then we go to 5. 5 is candle closed in the zone, check. Candle close. That's a check. Candle closed outside again, check. And then now you place your position, and now you wait for it to get to the next take profit level. And you can see it hit my all the items on my checklist, and that's why I will confidently take this trade and wait for it to get to TP without worrying, because it hit all my checklist items. Is that okay? And then do you come to the market at specific times? Okay. Based on how I am, I just trade Asian session mostly, but I'll also take some trades off New York session. So what I'll just do is I'll wait for the session open, probably get in like 30 to 1 hour minutes before the session open, and look at how market is behaving, and then I'll hunt for setups like this now on the charts that I have on my watch list. And that brings me to the end of the presentation. Is there a trade for you in every session you trade? You won't always get a setup, but trust you me, if you miss a setup on one, you'll definitely get a setup on the other. But you won't miss. You can't miss. If you have at least 2 pairs that you have on your watch list, then you can be able to. You can have a lovely. As long as you get like one setup of any presentation. What the fuck? If you get one setup of an open or like a London session, then you're good to go. Since you'll have like 2, if you have 2 pairs that you're watching, that means that if one fails to give you, like a good setup, the other will probably give you a good setup. So what pairs would you recommend besides GJ? So I said UJ, then there is Audi USD. You guys can go and check them out. There is Audi JPY, and there's also which other one gives you good? Basically UJ, GU, GBP USD, Euro pairs also give you good setups. Yeah. So thank you guys for your webinar. So clear and straightforward in your presentations. I'm loved. USD card also. Sorry, USD card. How do you marry the higher time frame and lower time frame? Okay, I didn't have a screenshot for that, but I'll just explain it real quick. Because Forex God is waiting on his presentation. So let me just draw it on the desktop. Right? So you can find, just wait. let me just draw it for you real quick, how you're supposed to marry the higher time frame and the lower time frame. Let's say this is the higher time frame forming a zone here, okay? Right? So this is a higher time frame, let's say 4 hour daily, probably, especially 4 hour and daily. Those are my higher time frames. And so is Strux, yeah? So when you anticipate price coming back, price will definitely come back to the zone, right? So what you'll notice is, if this is magnified here, let me magnify it here. So you'll see that if this is the higher time frame zone, no, why it isn't visible. If this is a higher time frame zone, if this is the higher time frame zone, this right here, you'll see that on the lower time frame, price will form minor zones. I don't know whether that makes sense. So now you'll see minor zones in here. And now that's where you wait for your entry. Depending on how price has moved away, just as we were saying in the checklist, if price comes back, you'll aim for the move until somewhere like here, or probably until your pip, because price stalls at major zones, like the 4 hour or 1 hour. Price doesn't behave like the 1 minute of the higher time frame. Price stalls at major levels. And that's where you get, as a scalper, you get your sniper entries and all. So thank you guys for listening and responding really well. And now I'll give Six God the chance to present. Let me just make him a presenter. So just a minute. Yo, brother, Six God, can I hear you?
Yo, can you hear me?
Yeah, I can hear you, brother.